So Chinese equity markets stood out in the month of June. You saw roughly around a 16% increase in equity markets in China. And from May onwards, you started seeing that come off. For the last week of May, you started seeing a fair bit of a correction in Chinese equity markets. It came off around 7% or so. Now, it is very important to understand that Chinese macros, China property sector has actually been fairly weak and it continues to remain fairly soft. But most other indicators in China continue to hold up, continue to remain important. So it is important to keep a very close track on China and China macro variables to get a sense as to how the equity portion in China will also move. Now, why is that important? Now, if you look at China, inflation really isn't there, largely on account of the fact that you've seen a property crisis. You are not seeing too much of strength in consumer demand. Most of the strength in China, the 5% plus GDP numbers that you're seeing in China, is largely coming from one, infrastructure projects, a lot of push there. And you're seeing a lot of focus on manufacturing. That has really kept China equities also up, China macros also up. Now, if you look at a long-term relationship of China with respect to inflation, you can see the China PPI numbers, producer price inflation numbers. You can see the Shanghai Shenzhen index and the China inflation numbers. You can see that there is a directional correlation there. They seem to be moving quite hand in hand. And this entire drop that you saw in Chinese equities from around end of 2020, you can see a similar move that happens with China inflation numbers coming down. Now, China inflation numbers are getting much better. From minus 2.5% PPI inflation, it is now almost closer to zero. So this is a narrative that one has to also keep a close eye out for. The second thing is you saw a rally in copper, also based on China news flows and China macro. And if you plot the Shanghai Shenzhen with copper, you can actually see here that the pickup in equities and the move in copper have happened fairly hand in hand. So China remains an important market to look out for. Now, if you look at China equity valuations, they are fairly low. They're around 8-9 PE. And the reason why they are also 8-9 PE is because of the macro concerns markets have. And more importantly, the fact that China has deflation. So when China comes out of this deflation spell, there is a likely possibility that if there is increasing confidence of markets on China, that can see an impact on flows into China, FII equity flows into China. As we speak, the markets in China are waiting for the third plenary session that will probably start around 15th, around sometime next week. Markets are waiting to see what narratives will come out from there. As of now, markets are expecting deepening of reforms to happen in China.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.